Welcome back to Robinhood Stock Market Watch List Facebook group video. Today is Sunday, June 5th. We are going to talk a lot about, basically we're going to go over some straddling strategies, short-term and long-term, because there's quite a difference. But also we want to talk about the Amazon split situation, as well as other things that are scheduled to happen this week. So one of the most important things when straddling is it's really good to know our moving averages. It's something we always talk about. It's our buying and selling signals, our indications. It helps let us know whether a stock is going up or down. And so if we can kind of get a grasp of that, we can kind of have a better understanding of everything. And so let's talk a little bit about the moving averages first. And so in previous meetings and as well as our videos, I've talked about moving averages, but one way we can practice trading moving averages when the stock market is not open. Because when the stock market was open to me when I was new, it was like the Super Bowl. It was like it was game time. It's time to rock. You know, it's time to, you know, it's not time to practice when the stock market was open. That's how I felt, you know. And so I used cryptocurrency because it was live. It's not that volatile like the stock market is when it opens or when it closes. Everybody's in a rush, trying to buy, trying to sell. And that's why we have those big, huge movements. But as long as we can have some time to practice, and with cryptocurrency, hopefully it's available in your area, but it's something we can do right before bed, or maybe right when we wake up, during lunchtime, anytime. And so we can configure our moving averages and whatnot according to your style in trading. But it's still good practice. You have unlimited day trades with it. You can trade $1 if you want it, or $10. It's just a good idea to use real money other than the paper trading, because paper trading, that's like what I call monopoly money. That is it's just fake money. But when you're using real money, it's like psychological warfare to your mind mentally. And that's one of the things that's important to exercise is the mentalness that affects your emotions, because your emotions can interfere with your intelligent buying and selling decisions. And so that is one of the reasons why when I was new, I wanted to practice this, because practice makes perfect. And the more practice that you have, the more confidence that you're going to have. So when the stock market is open, you're like, you own it. You're like a master at it. You know exactly what you're doing, when to do it, when to get out. So we're watching Bitcoin right now. Bitcoin just like an hour ago was, $29,574. And so we have it on the 5-minute graph right down here. And so I used the 3 moving average lines using the EMA moving averages, which are your exponential moving averages, which is more reacting to price movements, and it's more optimized for day traders and swing traders. Because it reacts more with the price movement. But for a long-term investor, it may provide too many signals, and you want to change it to maybe a simple moving average, or just a regular moving average. So that way the moving average lines aren't moving as responsive to the price changes. But we can see once the moving average lines crosses over each other, as well as the price line has crossed over it, this is our last and final signal. This is our uptrend signal, letting us know that it's going up. Now in the options world, this is where we want to sell our put, because if the price is going to go up, we got to get out. Even if it's at a loss, if it's going to go up, you're going to even lose more. So if you're holding a call, that means just hold on to it until further notice, or to sell your put, or to buy a call. You buy your call or stock or share or whatever, and you ride it all the way until it tells you to sell. Your sell signal even though when it tells you to buy or when to sell, just depending on the graph, it doesn't know exactly how long it's going to go that direction or how far, but it will kind of tell you, the next trending direction. And so the moving averages, and then on the bottom here is the MACD. Both of these are the most commonly used moving average charts for professional and successful investors and traders. So if you're not using it already, I highly recommend that you use it, because it's just an extra tool that is going to help your success. And so, but it's not like you have to replace your existing system. Like if you're using Robinhood, there's nothing wrong with using that application. It's a very easy, simple tool, but it does lack a lot of very important essential tools. But it's very easy to execute an order. Unlike most other applications, it requires a little bit more input, which takes a little bit more time, and time is very sensitive when it comes to the stock market. So I highly recommend, and what I'm using Webull. You can download it as a desktop application. It's also an app you can download at the App Store. You don't have to sign into it. But when you do, it does open up some extra stuff, but you can just download it. And so, but it's a very, like I said, it's a very essential tool that I would highly recommend using amongst your other tools. But like I said, practice makes perfect. Just use this advice to accelerate your experience level. So that way you can level up unlike, you would ever imagine. Because like I said, practice makes perfect, and confidence is key. So once we have mastered the moving averages, like I said, it's time to get to the next level. And like I said, straddling becomes a little easier. And so straddling, if you're not sure what that is, maybe this is the first time you're hearing about it, straddling has to do with options. Let me switch back to the web browser here. Options allows you to bet a stock goes up, and it allows you to bet a stock goes down. Let's see. I'm just going to pull up an image here off of Google. So a call is to bet a stock is the price is going to go up. A put is betting against the stock, betting that the stock price is going to go down. So a lot of new investors and traders that are getting into options believe that they can pick one or the other. They don't know that they can do both. But it sounds like it's conflicting. Why would you bet a stock goes up and bet that it would go down at the same time? Well, I'll show you. And it's really an essential strategy that can be used year-round, especially on a stock that has a high market cap and a stock that may be very volatile, like for example, Tesla. We're going to switch to options here. So now that we're familiar with what a call is, so the calls are on the left side of what I'm showing you for Tesla. The puts are on the right side, going over Tesla. And so this is Friday's activity. And so there's an expiration date, because with options, there's expiration dates, because when you're betting, they what a particular strike price, which could be like a target in certain circumstances, there are different values on them based on the expiration date. But mainly, even though Tesla was down substantially last Friday, the calls were down around 60%, and the puts were up over 200%. So when it comes to straddling, you can only lose what you have in one hand, but your gains are potentially unlimited in the other hand. Now, with last Friday's expiration date, you would have lost almost 100% of your calls, but your gains on your puts would have been double or triple, or maybe even 1,000%. When it comes to straddling, it's highly recommended to always use the always use the soonest expiration date for the most volatility, because if it's more volatile, then it's going to be more extreme, meaning where your gains are going to be higher and your losses are going to be lower. But like I said, you can only lose 100% what you put into it. Your gains are potentially unlimited. There are certain circumstances that we'll go over here in a little bit where you could potentially gain 4,000%. And so, but like I said, we'll go over that here in a little bit of how we can figure out what stocks are going to be able to do that. But on a daily basis, most investors and traders they straddle Apple on a daily basis. A lot of them do SPY, but SPY just has a different SPY, I think, depreciates quicker than Apple. So that's why I recommend doing Apple, because Apple has a lot of volume in it, and the time decay is very, very minimal compared to anything else. And what we're going to look at some options activity, and you'll see that Apple is the most active stock option than any other stock option. And there's a reason for it. And it's just exactly what I'm telling you, is that because it has the least amount of time depreciation, plus it's very predictable. It doesn't move that much, but 1, 2, 3% in a day. It moves very slow, so it's very easily predictable. Plus, it has, even though when it doesn't move very much, Apple only moved 3.86%. It was on the calls part was down almost 60%, but the puts were up 160%. And so, but if you could do that daily, it just become very consistent, where it doesn't matter if the stock market surges or it plunges. As long as it picks a direction, it's profitable. It's a win-win. You can have your cake and get to eat it too. And so it doesn't matter whether we're in a bearish season or a bullish season, or if the stock market's being manipulated. I mean, game on, make it more volatile, bring it, and straddling can be a lot of fun, and it's very profitable, and it's consistent. And if you're straddling Apple on a daily basis, you don't have to look for anything else. You just stick with what works. You don't need to reinvent. You don't need to, fix what's not broke. And so things could be a lot easier and a lot simple if we just try to simplify things, and just take a little breather and just focus on one thing at a time, and just focus on Apple. And then, like I said, we'll kind of go to the next thing. And so, so this is straddling. So we'll talk a little bit more about that. So strike price, I always highly recommend picking the strike price that's the same as the share price. And the reason why that is because if you go far out of the money, which means away from the share price, then you may experience more time decay, even though the value may be a little less, but the depreciation is going to be a little bit more compared if you were to buy it right at the money. And you could be around the money, around the share price, to a certain degree, 1-2% ish, a dollar or two, but the further you are, the more risk that you're taking, and where you're not going to maybe make, unless it really goes substantially, like if it moves 20, 30, 40%, that can make a huge difference. But in those situations, it's more of a lottery play. But on a daily basis, this is what investors are doing, and one of the things that professional traders say is follow the money. And when you follow the money, you're following where people are investing their money and what they're doing, and because there must be a good reason for it, And so let's go. I'm gonna switch screens here. So a lot of my options activity I get from a website called barchart.com. It's free, doesn't cost anything. There's an options tab on the menu area on the top left. We click on that, we'll click on most active options. Now this information is going to be based on last Friday. And so Friday's overall, then again, this is overall, the whole entire stock market options system. Apple always dominates the top of the list. Look at 1.4 million in options volume. Now, out of this volume, 52% are betting that the stock is going to go up, where almost 48% are betting against the stock, betting that the stock is going to go down. Looks like straddling to me. So if investors believe that Monday or the next trading day was going to be bullish, a majority of the percentages would have been calls, 60, 70%, 80%, whatever. This is telling us that investors have no idea what Monday is going to be like. It's a 50-50. It just all depends on the weekend news, especially with Russia, Ukraine, North Korea, China, Taiwan, so on and on and gun laws and blah blah blah. And so a lot of that just can hit Monday all at once. Even though it doesn't look like we have any economic reports or anything really, I think the government's going to announce or do to really manipulate the stock market Monday. However, the Amazon split is going to create a lot of volatility. And usually, when a stock splits, a big market cap stock like that splits, it's usually very bearish for a little while. And so, but I would definitely imagine that we'll see Amazon quite on the top of the list here, even though it's about seventh place. And so, a lot of people believe that Amazon is going to surge on Monday, which would be the first if it did, because, like I said. Keep in mind that Amazon is still a very high market cap, even though they may seem like that the stock price is going to be really cheap. I can't remember what I've estimated what the stock value is going to be, like $120 a share or something like that. But I still anticipate that it's going to kind of plunge around the probably 105 area. It's going to get close to probably $100. Usually when a stock splits like that, it usually kind of comes down about 20% from when it splits. So if it's around $120, then it should be around it should fall around $100. And so but like I said, I think it's going to get closer to about 105, 103, and then kind of recover and then go from there. Because what investors are going to do, again, what investors say, they say buy on rumor, sell on news. So when the news comes out, the Amazon split everything, that's when the investors and traders are selling. They're securing their gains, and they know it's going to fall 20%. They're going to wait till it does that. They're going to buy back in and then ride the wave upwards. Now, this also gives us a good opportunity to ride the wave down buying puts. So, but we didn't want to hold any calls or puts on Amazon, because anytime when there's a significant news or change in the system, it is affected by something that's called IV crush, or implied volatility crush. It just naturally affects both calls and puts by devaluing it instantly, and it's terrifying, and it's a huge loss. And anytime if you are holding calls and puts, whether it be through a stock split or even earnings, you do have the possibility of a risk of an implied volatility on that. And that's why if you are holding calls or puts through earnings or a split, it's a lottery play. It's money that could completely be vanished, but money that you won't be worried about. If it's gone, it's gone. You're not out really anything. Your primary strategy has to be straddling Apple, just like everybody else. Again, follow the money. There's a reason why they're doing it, because it's consistent. Stop looking at anything else is a distraction. Stop focusing on anything else. Apple straddling is your primary strategy. You put maybe 80%, go heavy on that. But however, avoid splits and earnings. Skip those days, but like I said, focus on so when to buy. So normally, when I started doing this, and I learned this strategy years ago from when I started putting these chat rooms together, because I had learned that every investor and trader specializes in something different. It was nice because I had a guy that specialized in options, I had a guy that specialized in penny stocks, biopharmaceuticals, tech, so on and so on. So we just became a phenomenal team within our chat room. So we were all able to learn from each other. And the options guy always said he just straddles. Just stick to straddling and you'll be successful. And so so I had really experimented with every single strategy that there was, and that was the most successful and most consistent strategy. And but again, you follow the money. That's Apple for sure. Tesla is more of the premium side of Apple. Once you start getting like a large account, because Apple shares are like $100, couple $100 versus, not shares, contracts with options, which is like shares. So they're usually, $100 or couple $100 a contract, versus Tesla is usually, $1,000 or several thousands of dollars per contract. So once you start building your accounts where you have tens of thousands of dollars or hundreds of thousands of dollars, then you want to start switching over to a straddling Tesla, because you're not having to buy as many contracts. And because if you start buying tens of thousands or hundreds of thousands of dollars worth of contracts, that now you're buying hundreds or 1,000 contracts, and sometimes those don't always execute instantly. They execute in chunks. You'll have 20 that'll execute, then 50 that'll execute, and then all of a sudden, it just depends on the price movement. Then all of a sudden, now it's all partial, and then you have to go in there and change it. So if you can try to deal with the least amount of contracts, then you want to switch over to Tesla. That way, you're not having to worry about all those large amount of contracts, whether they get executed or not, or you're right in the middle of a partial and having to go back in there and change it. So, and that's why both Apple and Tesla are the number one most traded stocks out there. And you can see that Tesla is still about 50-50. So there's a lot of straddling activity going on. Again, follow the money. And so AMD, a lot of you guys like straddling semiconductor stocks like NVIDIA, AMD, and so on. So, but again, you can see a lot of 50-50 going on right here. Now we have AMC. I always recommend try to avoid meme stocks or hype stocks, because there's just a lot of manipulation, when it comes to like AMC, GameStop, and whatnot. So these are just, they're just there because, there's a lot of people that are holding stocks and shares and whatnot on there because they're falling victim to the manipulation. So, but so far we see that 72% of are betting that AMC is going to keep going up or go up either, whether it be that day, which would be last Friday, or most likely on Monday. But sometimes we see some very, very unusual activity. We have the charge point, which was part of the last week's earnings report. They were up out of when everything was down, they were up almost 5%. And but these investors, out of this 309,000, which this stock is not normally on this list, and now it is. So there's a lot of activity, but out of this amount of volume, almost 97% are betting that this stock is going to keep going up. So this could be very valuable information, because normally we don't see this amount of high percentages, as you can tell. Normally we'll see 50%, 60%, and sometimes 70%, but very rarely do we ever see 80% or 90% in either direction. So we have to consider this unusual activity, because it just doesn't ever happen. Then we have Amazon right there, and then so on and so on. So this is where we can really, if we start looking at this daily, we can see what stocks are normally on here and what stocks are not normally on here. And when we see a stock that's not normally on here, we can kind of consider that unusual activity and whatnot. So you'll just kind of, you'll be able to figure it out once you kind of look at it regularly. Now, if we scroll to the top, we also have ETFs. So if you wanted to look at ETFs, you can. And one of the most popular ETFs is going to be SPY. As you can see, we have 3.8 million in options volume. However, with that, 56% is betting the stock's going to go up, possibly the next day or the current day, or 43% are betting against the stock, betting it that it's going to keep going down. So most likely, it's still straddling to me. I mean, this looks like, again, people just don't know, but you can kind of get more information on maybe some of these other ones. But we'll go back to stocks here. But also on the options area here, we can also visit options volume leaders. So if we click on options volume leaders, this will provide us the most active individual calls and puts. And this will provide us the strike price, the expiration date, and the DTE, which is the number of days until that option expires. So like 42 days. But we can really see, again, follow the money, where people are investing their money, rather than just talking about it or seeing, or posting maybe online, figuring out, some feedback from people. You can see where people are putting their money. And when we're looking at some of this stuff, we have volume, which again, volume resets resets itself every day back to zero, but now we have open interest, which you don't normally see that in shares, but you see that in the options world. The open interest, which is the total number of open contracts that have been traded but not yet liquidated via offsetting trades. So that just shows a lot of interest and can accumulate depending on the volume. So the next day, so for example, if this particular call, the strike price, $15 for the charge point, it had no interest prior until it had great news, and then people they were all about it. They're like, this thing's going to keep going, and so now we have almost 65,000 in options volume, where previously it had only 818,000. So because of the huge difference between these two, this is showing pure buying activity, where it had no activity before and now it does. Unlike this one, we don't always know exactly if this is just buying activity or is this selling activity, because previously it had a total of 92,000 in open interest, which is kind of like an accumulation of volume prior to that current trading day, where again, usually volume resets itself back to zero every day. Open interest accumulates that volume every day. So that way you can kind of see kind of like the total of the volume from when it first originally was created. And so what we can kind of see with this, and this strike price, which is $14, and it expires this next coming Friday on June 10th, they probably sold this strike price and bought the $15 strike price, extending their expiration date to July 15th, approximately 42 days from now. So that's kind of what it looks like to me. Hopefully that's what it looks like to you, because we can find a lot of clues in this little bits of information. And that's really, really important. And so we can even see even a more extended time frame, We have a $22 call strike price that expires in August, which is approximately 72 days. Again, it had no open interest, and now it's got a lot of volume, which is pure buying activity, about 90 some odd percent, remember? And so even if you're not in the stock options, you can still use this information to buy shares, to figure out what investors believe that how far the stock is going to get. So even if it gets from $15 to $22, that could be like a 40 or 50% gain. Even if you're holding it as a share for 77 days, that's a huge gain. And maybe they pay a dividend. I don't know if they do. But you may be able to find stocks that not only are they appreciating, but they may pay you a dividend every 3 months. And so this is like a very, very valuable information. But when we're looking at it either on a Friday, Saturday, or Sunday, it's important to also look for the zeros on the days until it expires, because it's no longer valid. When tomorrow the market opens, anything that has expired will be removed off this list. Now, when the stock market opens, this list will usually populate within the first hour of when the stock market opens, but then it'll update every 15 minutes throughout the day, as long as the stock market is open. And so you can always come back, refresh the page, and see where the stock option system is currently at, where people are investing their money, what are they doing, and that way we know what's going on. And so again, this was options volume leaders. So both of these are very, very important. But you can also go to the unusual options activity just to see if maybe there's anything that you may have missed. And but what we're trying to look for is low open interest and a high volume count. And so out of the first page, the first one was that charge point one, which we had already seen. And then the next one would be this other charge point, which we've already seen. Both hold around that 60,000 in volume, where all the other ones are pretty minimal compared to that. So it looks like we found the ones that provided the most unusual options activity. So there's a straddling area over here. We have straddling and strangle. So both of them hold the same concept. However, straddle is where okay, so both of them, you're again the same concept where you're betting that the stock goes up and the stock goes down. The difference between a straddle and a strangle is that the straddle is the same strike price. The strangle is where the strike prices could be different. The call could be a little higher, or the put could be a little bit lower. So but we can kind of look at this options activity, and I highly recommend that we do when we do our due diligence throughout the week as well as the weekend. So we'll start from the top of the list. When we click on these, we want to try to find multiple of the same stock. If there's multiple of the same stock, then that means that is unusual straddling activity that has been detected, because that means there's just a lot of activity, and there could be something flying under the radar. You know, something that's about to happen that may not have happened yet, but it's getting ready to. So we'll start at the top of this list, we'll work our way down, and again, we want to try to find multiple of the same stocks. So it looks like we got Costco there, work our way down. No, so there's just the one. IBM, work our way down. No, so now we have two Apples. There's Apple there, there's a third Apple. Work our way down. So there's just three Apples right there. Bank of America. There's there. We'll work our way down. There's another one. Oh, two more. So there's three Bank of Americas, and there was three Apples. And so let's see Facebook. No. So it looks like Apple and some Bank of America, and we can see the strike price that has been chosen and the expiration dates. So again, as I have mentioned before, when it comes to straddling, always pick the strike price that's the same as the share price. Now, as I had mentioned, that a lot of people that do straddling on a regular basis, on a daily basis, is that they will buy maybe 5 to 10 minutes before the stock market closes. So they'll buy an equal amount of calls and an equal amount of puts 5 to 10 minutes before the stock market closes. Okay, they sell them the next trading morning, maybe within the first hour, securing their gains. And you can sell them either at the same time, or you can sell them at different times, maximizing your gains on one end and minimizing your losses on the other end. There's a potential, depends on what happens with the market, you may be able to gain on both ends. Just depends on what's going on. And that's where the moving averages really becomes important, because when the stock market opens, you wait for the first two signals to maximize your gains on one end and minimize your losses on the other end. And that's why it's really important that we download Webull or some other stock market application that can provide you those indications using the moving averages. But by choosing the soonest expiration date will make it more volatile, and we don't really see that on these two, unusual areas. But we do want to choose, like, again, the same strike price as the share price with the soonest expiration date for the most volatility, because with the more volatility, the better, because we'll have bigger swings. So we'll go to the long straddle, which the long straddle really is just usually just a few more weeks out. But again, starting from the top of the list, work our way down. We got Microsoft, work our way down. We just see that one. GGPI, any other ones on there? Nope. ET, nope. McDonald's, nope. Not really seeing a lot of multiple of the same, just a lot of variety of stuff. So there's 2 Teslas. There's one Tesla there, another Tesla there that people are straddling. That's very common. Again, as we were talking, Apple and Tesla, most favorable straddling stocks. Now we're in strangling here. So we got a few AMCs, which I don't recommend AMC because, like I said, I believe it has a lot of time decay, but it's also a very highly manipulated stock. But anything that has a lot of time decay, avoid it, because it can make even straddling difficult. We have Blackberry here. Any others? Nope. It's more AMC. Twitter. No, just a lot of AMCs. So nothing really there. Let's go long Strangle. Take a look at that one, and then so we got a few Teslas. We got 1, 2, 3, 4, 5 Teslas on the first page. This is what's that? Micron. So we have MU. There's 3 of them. These are the semiconductors. Looks like that's about it. The other thing too, as I mentioned before, long-term options or straddling. So this is that. So let's go over this really quick. So going back to option volume leaders. We talked about the volume. Again, volume is very active. I mean, that's your buying and selling activity. But open interest, if I click on open interest, now it'll sort it out by open interest. But because of this website, they want you to unlock the entire list, blah blah blah. You probably got to pay for it. But if you click open interest, then click refresh on your browser, and it just automatically refreshes the entire list. It's like a little hack, and so that way you don't have to pay for it. So it now has sorted out the entire list by open interest. And so we'll see, like, well, again, Sundial is one of those manipulated stocks. Avoid it. And, unless maybe they legalize recreational cannabis, but to be determined. Then we have AMC right here, very high open interest right now, with a very high strike price, $145. I've seen this for the last year. Avoid it, because like I said, these are very, very manipulated stocks. All they're doing is just hurting people, and avoid it. So more realistically, focus on the high market cap stocks. So really, we got Twitter here with a very, very high open interest of 115,000 that people are holding on to. They're buying more on the dips. And so basically, Twitter is currently at $40 a share. We have a $55 strike price that expires in 231 days. That's next January on the 20th of 2023. And whether you decide to buy this call, or maybe you could buy shares of it, you can use this information for buying shares, stock shares, rather than options. So if it goes from $40 to $55, that's like a 40% gain, And so or even this PBR, that could be like a 30% gain, going from $14 to $20 in that same amount of time. We can kind of work our way down. But it's good to really look at this daily to see what people are doing long term. There's another one for the charge point. They're betting the stock's going to get up to $20 before or at the end of the year. And you may be able to find some pretty huge, significant ones in here, throughout the week. And so that's the options information and straddling information. Hopefully that makes sense. Does anybody have any questions or comments before we go on to the next thing? Feel free to unmute your mic or you can chat.
Hey Carlos, Kumar this side.
Hey Kumar.
So after joining this group, I started doing the straddling. It's working somewhat, but sometimes I still very early, I'll put then holding call, and then again market is going down. So at that in those days, I have to book little losses. So I have a request here, you are a pro in straddling and doing regularly since few years. So how difficult for you, if you are since you are also doing a straddling every day on Apple, and I also started doing straddling on Apple. So is it difficult for you to intimate when to sell a call or put? With the time, if I spent few months, then maybe I'll be also able to figure it out when to sell and when to not sell the call and put option. So can you intimate to the group group of trading 1 or 2 at my call on, or I holding put in the morning? I am using this graph in Google, but still sometimes if I'm using 1 minute, it's giving false signal. Sometimes 3 minutes is also giving false signal. So it's in market it is difficult, and because of fear used to sell early.
Kumar, that was all a great question. You were breaking up a little bit, but I think I got the gist of it. When to sell, when to buy, those kinds of really important questions. And again, it really comes down to the moving averages and everything. And, but, a lot comes with it, as you had mentioned, false signals and whatnot, how to eliminate that. Now, when it comes to the 1 minute chart, the 1 minute chart is really the one that's going to provide you the most signals. And that might be just way too many signals for you, that you just have to simplify it a little bit, because you can see there's too many crossovers. There's too many crossovers where the moving averages are crossing over each other. But it may be really important to use within the first hour or maybe the last hour of the stock market, because those are the times of the most volatility. And so we're trying to figure out what the stock market's doing or heading. And so the gray area here on the left side is pre-market. So when we're looking at Apple, and so when the stock market had opened, it kind of came up and then kind of quickly came down, all within 5 minutes. And so you got almost 2 signals within 5 minutes. And so this could be kind of a false signal, and then it goes down, provides another signal, a temporary uptrend signal, and then kind of falls flat. But if we try to simplify it a little easier, stick with maybe the 5-minute graph, we can see that, but it's really important to maybe do both. Just put them side by side. That way we can kind of put all the pieces of the puzzles together. But by looking at the 5-minute graph, the pre-market has been saying it's been downtrending the whole entire time. It's saying get out. If you are holding a call, get out, because it's downtrending until further notice. And it almost looked like it was going to provide a signal here, but it didn't. It did not do the crossover. But if it did, then that means to hold your call, sell your puts, or to buy a call. But in this case, it continued to downtrend the whole way. And if you haven't bought in yet, then when it kind of reaches the moving average lines, that's where you want to buy in. If you think it's gonna go down, you ended up buying your put here, and then it goes up, then you're going to start losing some of your gains, and you're losing some money on the table. But this is when it reaches the moving averages area, that's a good place to either buy or to sell. Just depends on what you're doing. But let's say that that you bought one or the other, and you don't have any day trades, and you don't have unlimited day trading. Let's say that you bought puts. The stock market's down, it's red, you bought puts, and now it's here, and it's telling you that the stock market or the share price is most likely going to go up, and you're like, oh man, I got my puts, and and I don't have any, and you don't have any more day trades. The best way to try to secure your gains is to counter it. If you have puts and now you have gains, to try to secure that gains without selling is to buy calls, because now if the stock goes up, you're going to gain on your call, but you're going to lose some of your gains on your put, but it's going to offset the balance. So that way you'll maintain what gains you have accumulated so far. So you're straddling. So that's a good way to try to secure what gains you have, by straddling, by buying at different times. But when you get close to the end of the day, that's when you want to go heavy into Apple, trying to maintain an equal amount of calls and puts. Now, if you're pretty optimistic that the day is going to be maybe either bullish or bearish, you could go as much as 60% on one side and 40% on the other side. But it's still very advisable to follow the money on what the majority are doing by looking at the most active options, because that'll kind of tell you what the majority are doing. If they're doing 60% on calls and 40% on puts, this could be kind of your guide for that straddling. Whether if you want to maintain it 50-50, a balance on calls and puts, or 60-40, this would be a good reference to refer that to, or just stick to 50-50 no matter what. Because like I said, sometimes that could be wrong. Sometimes all of a sudden, like I said, Kim Jong-un will launch a ballistic missile, or Putin makes another threat, and it just, it's some kind of unexpected thing, and it just kind of, lowers the entire market, no matter what anybody else does. And so anybody else have any questions or comments? Because what we'll do next, we'll look ahead for the next week. That way we can determine how the week, or what the week is going to look like. It's going to be bearish or bullish, but I want to make sure you guys fully understand the options and straddling.
Hey, Carlos.
Hi.
Can you show us like the Webble setting for which signals we should have in the graph? Because there's so many signals. Can you just show us a few of the signals that we must have in the?
Absolutely. And again, this is really, really important because as you can see, in the beginning of our meeting, we were talking about cryptocurrency and the moving averages and whatnot. And when we were talking earlier, it was up here. And so now it's down. We have our MACD, which really helps play an essential a part where they go hand in hand together, where the signals sometimes could be maybe premature with the MACD, letting us know, hey, the stock is going to go down before the moving averages crosses over each other. And that's why your moving averages and the MACD are the two most common used indicators by successful investors and traders. But to configure it is all based on your style of investing and trading, because if you're a day trader, you're going to want to use the EMA type of indicator, or if you're more of a long-term investor, you're going to want to just use maybe the MA, the regular moving averages, because it's not going to react to price changes as quickly as it would the EMA. So on your stock market application, usually you would need to find the little abbreviation of your moving averages. If you click on it, a little thing should appear, like a little menu. On Webull, it's a little gearbox. If you click on that, that'll provide your settings. And then with that, your main chart, which you can select one, you can go with your EMA or your MA or whatever that you wish. And then you have your subcharts right below that. You can pick up to 6 different ones. But like I said, you just pick one of your main ones, and then MACD is definitely got to be one of your essential ones amongst whatever else that you want. Then we have the lengths. We have these numbers, which are on there by default. We have 5, 10, 20, and 30. But when we're looking at this as like a daily chart, the lengths would be like a 5-day moving averages or 1 week, and then 10 days moving averages or 2 weeks, and then we have 20-day moving averages, or it'd be 4 weeks or 1 month moving average. Or if we're looking at it as a 1-minute chart, then it would be 5-minute moving average, 10-minute, and a 20-minute moving average. Now, if we click on style, that's where we can pick and choose how many moving average lines that we want, and maybe we want to pick and choose, how far that we want. So let's go more of a long-term scenario. So we're going to pick our 30-day, 60-day, and a 120-day. Let's look at Apple on the daily chart. And then you can see that there's, wait, hold on here. Make sure. For Apple, there we go. So daily, long-term, we're just not seeing those many crossovers. We had a big crossover here, but that was during the when the United States government shut down the economy for 2 months. We saw a pretty good crossover right there, and since then it's came up and has not done a crossover until now. And so basically it's basically, and it told us to sell until further notice, and so that's the indications that we're seeing. But we have 2 signals within like 2 years, and so that's where we can kind of go and configure our moving averages according to your style of investing and trading. And you could pick different colors and stuff depending on, maybe you want to personalize it, or maybe you're colorblind, pick different colors that stand out a little better to you. And so let's go back here. And then so let's go back here. So yeah, Bitcoin there. Let me change my stuff here back to what it was. There we go. But the MACD, usually you always have your default. You have your 12, 26, and 9. And the MACD is basically your 2 moving average lines. And then the bars on the bottom, The top bars are basically the gap distances between the two moving average lines, and then once the moving average lines crosses over each other, you have the gap bars. These are the gap distances between the two moving average lines. So it kind of lets you know whether the stock or the crypto is starting to hesitate and maybe slowing down, and maybe getting ready to go another direction. And so that's why it's really critical to use these two together. Any other questions or comments? I'm going to read through the chat room here.
Mr. Carlos, I have a question.
Sure. You accidentally muted yourself. Go ahead and unmute again.
Okay. So I have a question. So if MACD is crossover the moving average, either uptrend is that means his stock is going up, and this is going down, so that means it's going down. So this is actually a signal to sell your call or puts, right?
Correct. Absolutely. These are our signals to when to buy, when to sell. So it's really critical that we understand this type of language, and it is like a language. It's just like anything else. Of how to understand it. What do these words mean? And the only way to know is to continue practicing it, because if you don't use it, you're going to lose it. And practice makes perfect, and the more practice that you have, the more confident that you're going to have. And when I kind of discovered this, I wanted to accelerate my experience level and really be confident in it. And the only way that I felt that was possible is to start trading cryptocurrency on the weekends, or maybe on holidays. That way I can kind of get used to it. And crypto is very slow. Usually you're trading about every hour. And even between here and there, that would have been 1 hour. It doesn't matter whether you're making good gains on doing this. This is for practicing. Like I said, you can trade $1, you can trade $5, $10, $100, $1,000. It's all it is just practice for when it's game time. When the stock market's open. But it's just really important that we understand what's going on, so that way we know when to get in, when to get out, and to be able to maximize our gains in one hand and to minimize our losses in the other hand.
And how you set up your MACD? I set up my MACD is like 12, 26, and 9. I mean, it is the right way to do it or no?
Yeah, no, that's perfect. That's the majority of what people use. So stick with the majority, stick with what works, and that's perfect.
All right, thank you so much.
Yeah. Anybody else have any questions or comments before we move into the next step? Now, Kumar had mentioned in the chat room about sending alerts when there's a signal. The thing with sending alerts, Kumar, is that it takes time to send the alert. It takes time for you to receive the alert. It takes time for you to process the alert and to look at it. By then, the stock market is very time sensitive. If everyone is synchronized with the same information, we can react to what's going on instantly at the same time. And that's how Wall Street kind of works, and all those investors, because they're fluent with this information. So things react very quickly because we're fluent in this stuff. And so the more we learn, the more we'll earn. And so that's why it's just important that we just know all this stuff, because you won't need to rely on alerts or anybody else but yourself. And that's one of the goals, is to become a successful, independent investor and trader, where all you need is yourself and a couple things, and that's it. Now, Roberto had talked about candlesticks. Now, I don't like candlesticks. That's a personal preference. Now, the reason why I don't like candlesticks is because I like the lines because it's clear. I can see what's going on. I can see what's going on behind the moving average lines and stuff. I'm going to switch over to Apple here. Because we have the volume bars down below, and sometimes we can see kind of some volume colors within candles. Now, if I right click within Webull, we have line styles. I can pick candles here, but when you see candles here, now it almost looks like it's distorted. You can't really see exactly what's going on behind the moving average lines and whatnot. But the colors right here represent the volume. We have a green bar, red bar. They're the same colors right down below. So I'm getting the same bits of information repeatedly, and I don't need that. I need a clear picture of what's going on so I can determine whether to buy or when to sell. No distraction. It's like having drunk vision to me. You know, I mean, that's a big difference to go from clarity to distortion right there. I mean, that's, you know, yeah, that just doesn't work for me. I tried it once and like, nope, no, I'm not doing it. This is clear. This makes sense. So that's why I stick with lines, because it works. It's clear. You can see every bit of movement of what's going on. Rather than just a little bit. Okay, if nobody has any other questions regarding moving averages or straddling or options, we'll go on to the next thing. Let me switch screens. So the next thing is trying to figure out what the week is going to look like. Is it going to be bearish? Is it going to be bullish? Now, obviously, Monday is the majority of the effect is going to be from Amazon. Because Amazon is a huge market cap stock, and so one of the ways to try to figure out what the week is going to look like is to look for economic reports. Because when I was new many years ago, you know, I'm just trying to learn from everything and how everything works. But a lot of times we get these, you know, news articles from whether it be CNN or Fox News or Bloomberg or, you know, whatever. And all of a sudden they would talk about economics and stuff. And the stock market had already been, had a big movement in either direction for the last hour. And so again, we got to keep reminding ourselves, follow the money. Where are the news companies getting this information from? They're getting it from economic reports. So we need to know what's going to happen before it happens and not rely on the news, because the pros have that saying, buy on rumors, sell on news. So that basically means we have to be owning the stock before it reaches the news, because if it hits the news, that means everybody's going to sell and the stock's going to plunge. Just like what Amazon most likely is going to do on Monday, because it's going to make big news. And so the best place that I've been able to find economic reports that are very user-friendly once you kind of get the gist of things is investing.com. It's a free application you can download at the App Store, plus it's a website you can go to at any time. If you click on economic calendar, that's where we need to go. If you're on the application, it's a little calendar icon. You click on that, you'll see a couple choices between your economic calendar: holidays, earnings, dividends, splits, IPOs, and blah, blah, blah. But we want the economic calendar. That's really important, because when these news articles came out, they were saying, oh, you know, unemployment is up or unemployment's down, blah, blah, blah. Well, it's best to know what it's going to do before it happens, before it reaches the news, and this is it. So when we go to the economic calendar, we need to click on filters. We need to clear everything, because there's a bunch of stuff that's highlighted that we need to get rid of. So we click on clear. There's only two things that we need to have highlighted. One is the United States, and the other one is right under importance. We have 1 star, 2 stars, and 3 stars. We want to put a check mark under 3 stars because we're telling this system that we want to see everything that'll have the biggest impact on the United States stock market. So then we click apply. If you're using the mobile application, it should automatically save the setting. If you're doing it on the web browser, it's going to probably want to ask you to input the same settings every time. So this week looked like it's going to be very light. Where normally every week it's pretty filled with a lot of activities. So for some reason this week looks like there's not a whole lot of economic reports that are scheduled to happen, but it's still important that we look at this regularly on a daily basis, because there could be changes. Maybe there's not a forecast now, but there will be later, or maybe they forgot to add an economic report scheduled on the list. So plus when we get to this list, throughout the week, we'll see the actual report. So how we look at this now is if we're looking at on the website, it's going to default the time to Eastern time. So based off of your time zone, you'll have to kind of do some math and figure out the time of things, because we need to know whether it's going to affect pre-market or if it's going to affect after opening, or during the day, or whatever. We need to know when it's going to affect the stock market. Plus, it's important to know how it's going to affect the stock market. And sometimes we can get a good idea by looking at the previous report versus the forecast report of what they anticipate the report's going to be. Now, most reports, we need the numbers to be higher the better, but some reports we need them to be low. The crude oil inventory levels need to be lower, the more positive or bullish. If they're high, then that means it's going to be bearish. Because if crude oil inventories are high, the inventory levels are high, that means nobody's driving. That means nobody's buying it. They're not going on vacation. They're not flying. They're not they're not spending money. It's not helping the economy. Same thing with unemployment. If unemployment is rising, that's not good for the economy either. In fact, that's what we're starting to see. But with oil is what we're starting to see, because gas prices are going up 20 cents every single week. I mean, it's going nuts. But what we're seeing is that anytime somebody gets paid, most people get paid every 2 weeks, they're going to their cheapest gas station, probably Costco or whatever, and they're filling up, hoping that it'll last for 2 weeks until next payday. And so what we're seeing is huge swings on oil inventory levels. We're seeing people filling up, which is consuming a lot of gas, a lot of oil, and they're trying to make it last for 2 weeks. So the next report will be almost the opposite. And so that's what we're seeing. So last week, the report was very low, which is good, positive, bullish. But now it's going to be higher, even though it shows negative is good. But if the report can come in between here, we should be fine. But most likely it's going to come higher. Even if it's higher than that could still provide bearish characteristics. Most likely it's probably going to be in the positive, which is going to provide bearish characteristics. I am definitely bearish on Wednesday, June 8th. Now, for time-wise, so Eastern time, the stock market opens at 9:30 in the morning. So this is telling us that this report is going to be out at 1 hour after the stock market opens. Now, most people at Wall Street and investors and whatnot, they know about this stuff. And so most likely, if Wednesday is going to be bearish, Tuesday could be a good recovery day, because there's nothing scheduled to happen on Tuesday. So Tuesday could just be a good recovery day where the stock market is going to come up, because the stock market needs to come up before it can come back down. So Wednesday looks like it could be coming down. Thursday it could be down. This week just does not look that good. Does not look bullish for the most part, except for Wednesday. Wednesday is really the only day that looks bullish to me, because the unemployment report is going up. Even though the United States is adding more jobs, but nobody wants to work. That's what these reports are telling us. That's not good for the economy. And so Friday, we have the core CPI month over month for the month of May. Now, the previous month for April was 0.6%, which I believe even before that was higher, but we're seeing a trend, a downtrend that is getting lower every month. Now, if you're not sure exactly what these reports are, what they mean, feel free to click on it. It'll tell you right below, and just really simple, just a tiny little paragraph, that the core consumer price index, or the CPI, measures the changes in the price of goods and services, but excluding food and energy. The CPI, which is on a different report. The CPI measures a price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. Now, the paragraph down below will kind of tell us how it'll affect the stock market. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or a bearish for the US dollar or the stock market. So like I said, most reports, they need to be high, but some reports, they need to be low, like unemployment and the crude oil inventory levels. So again, this is a really great way to determine how the week is going to look. But you can also look ahead even more for the next following week after that. And now you can see we have a lot more reports the week after next, and we're even having the Fed interest rate decision, and so that's going to provide a lot of volatility. Now, when you know a day is going to be volatile, going back to straddling, volatility is key for straddling. It is important, and that is one of, I mean, you just want to nosedive into that heavily, because now we can see we have 2 economic reports that are scheduled to be released 1 hour before the stock market opens. So that's great. Right at opening, it's going to be really, really volatile, perfect for straddling. And so, so this is just great information to really plan ahead, to plan our trades so we can trade our plan. But like I said, the majority of our straddling should always be, the majority of our strategy should always be straddling Apple. Now, other than economic reports, it's really important that we always know about the earnings reports. So every Saturday, I always post the top, or this. So every morning, or every Saturday morning, I'll post the top 10 earnings reports that's scheduled to happen for this week. And here it is. And so we have our Monday, Tuesday, Wednesday, Thursday, Friday. Obviously nothing on Friday. We're really close to the end of the earnings season. So next earnings season will be next month, obviously. So but we always show our, before open, after close, and everything. So everything's right here. But the top, and they're all kind of in order by, most anticipated. So the top ones are very popular, high market cap, potential, big movements. But I always post the top 10 out of those are right here. So that way we have our NIO. NIO's the Chinese EV company. We have Docusign and so on. So the featured area, when I designed this group about 4 years ago, the featured area, it was used to be announcement, was kind of like my bookmarks. Whatever that was important to me, I would bookmark it on there. It was like a bookmark for the cloud. No matter where I was, whether it was on a desktop or my mobile phone, it was boom, my bookmarks were there. And then people caught on to it. It was like, they utilized this group, for a lot of reasons, but a lot of it, they're following me. But I post usually throughout Saturday and Sunday morning the top 10s analysis is right here. And so let me see if I have, better find, NIO. So NIO's right here. So NIO was number 1. So NIO is confirmed to release their earnings report on Thursday morning before the stock market opens. Now, if we're going to straddle earnings, again, earnings, we could be affected by IV crush, which is called, also known for implied volatility crush. It has the potential to devalue both calls and puts if there's no movement, very little movement. But as long as it has a big movement, we have a really good chance of huge gains. Now, if NEO, now these reports are basically, so even though these reports are, even though these are reported during the second quarter, these are still first quarter reports. So that's January, February, March. And so, but we also post the, their sales and delivery reports and everything here. And they've been struggling with lockdowns and stuff like that. So it just doesn't look like they have built enough and delivered enough vehicles compared to what they've done in the past. And so, but it does show that the company has an earnings release has a 50% expecting an earnings beat. Now, out of that, option traders are pricing in around a 15% price movement in either direction. So if we know that the stock price is going to be very volatile, we could take advantage of that. If a 15% price movement either direction, straddling should be a no-brainer. But if it doesn't, if it only moves like 1-2%, then we're going to be affected by the implied volatility crush. And so when we're doing a lottery play like this, again, we want to do small amounts. We go heavy on our primary strategy, the Apple straddling strategy. We go a little bit of light on this. These are lottery plays in case if things don't go as planned, we lose both ends. We're not out a lot of money. But if it does work out, we can potentially gain like 4,000% on one side. And so that's kind of what we're looking for. When we buy a lottery ticket, we hope that we win. If we don't, we just throw it away and we move on. But if we win, usually we could win a good substantial amount, and that way we can apply that towards other lottery plays. And so the next one is going to be the really Docusign. Docusign was basically kind of second on the list. Docusign, which is kind of like your digital e-signing stuff, it was a pandemic stock ultimately, because as people were at home, they're we're using this to do mortgages and buying cars or whatever, But companies now are, the market. I mean, the economy is open. People are more, and businesses want to do more face-to-face stuff. And with all the legal stuff and documents, a lot of things are carbon copies, anyways, and whatnot. So a lot of businesses are going back to that. They're not using Docusign. Plus, they're trying to save money. Docusign is a premium service, and so businesses are, especially with inflation and stuff, they're trying to cut costs here and there as well. So so Docusign is confirmed to release their earnings report on Thursday after the stock market closes. The company's earnings release has a 34% expecting an earnings beat. Now, try to reverse that. What's the opposite of 34%? That's that's like 66%. That is percent chance that it's going to go down. 34% chance goes up, 66% chance it's going to go down. And so most of the time, we usually see 60, maybe 70% is expected to beat its earnings. That's normal. That's average when you're looking at this stuff on a regular basis. This is well below average. Docusign, it looks like you are in a lot of trouble. However, option traders are pricing in around 21 to 22% price movement. My goodness. Now, if we look at previous earnings reports on Docusign, they're struggling. I mean, they've been dropping 20% like clockwork. And so it's made a huge, significant gain in straddling. And even if there's some kind of manipulation going on here and they surge 20%, you're saved because you just straddled. And so this is telling us just know there's going to be a huge price movement in either direction with this guy. So some other ones, we have the science applications, which is scheduled to release their earnings tomorrow morning, Monday, before the stock market opens. Company's earning release has around a 59% expecting an earnings beat. Option traders are pricing in around 9.5% price movement on that tomorrow. But for options, we're definitely it'd be too late on that one. The Fudu Holdings is confirmed to release their earnings report also tomorrow morning. They have around a 23% expecting an earnings beat. That looks really bad for them. However, option traders are pricing in around a 14% price movement in either direction. And then energy partners. Energy's always been a very good subject lately. And however, NGL Energy Partners is scheduled to release their earnings report on tomorrow after the stock market closes, so around 4:25 p.m. Eastern time. However, the company's earning release has a 36% expecting an earnings beat. And again, these are first quarter earning releases. So even though we may be pumping more oil in our country now during the second quarter because of the Ukrainian invasion, but we weren't really doing much for oil here during that time. In fact, most of our oil that we get comes from Canada, which is very surprising in certain points, but in other points, it's understandable. However, with this, the stock has averaged in the past, has moved around 12% in either direction. So we are anticipating some big movements in this, tomorrow after close. So we'll have to kind of watch it and see what it does. Next one is going to be your Academy Sports and Outdoors, or ASO is the ticker name. They're scheduled to release their earnings report on Tuesday morning before the stock market opens. The company is company's earning release has a 44% expecting an earnings beat, which is almost 50-50. However, option traders are pricing in around 18% price movement in either direction. Now, Coupa Software is confirmed to release their earnings report after close on Monday. The company's earnings release has a 53% expecting an earnings beat, so 50-50 chance. However, option traders are pricing in around a 13% price movement in either direction. So again, this is going to be a very, very volatile week. A lot of times when these stocks move big like that, it can affect other similar stocks in that industry. Cracker Barrel, never ate there before, but that would be very interesting one of these days. However, Cracker Barrel restaurant basically will be scheduled to release their earnings report Tuesday morning before the stock market opens. However, they have about 44% expecting an earnings beat, which is not good for them. However, option traders are pricing in around a 5% price movement in either direction. Now we have the GSX TechU Edu, which is it's an educational thing, I think in China, software technology, something or other. However, they're scheduled to release their earnings, looks like Monday morning before the stock market opens. However, they have around a 15% expecting an earnings beat. That's the lowest I have ever seen it in these 4 years that we've had this group. That 15% expecting an earnings beat is absolutely one of the lowest. The stock has averaged around a 12% price movement in either direction in recent quarters. Lovesac. Now, a lot of times, you may not know what the company does just by looking at the company name. So I try to post a picture of more information about the company, because a picture can say 1,000 words. So Lovesac is obviously designed, furniture and little bean bags and stuff. And so Lovesac is scheduled to release their earnings Wednesday morning before the stock market opens. The company is earnings release has a 72% expecting an earnings beat, where option traders are pricing in around a 13% price movement in either direction. Now, after we've done all of our due diligence for the weekend to plan ahead, it's really important that we go to investing.com to look at, because every Sunday morning they're gonna create an article. This is the top 5 things to watch in the market. Now, we've done our due diligence for all those things, and we always want to refer to this article to make sure that we haven't missed anything. So I'm going to read it for you guys. So the stock markets ended the first week of June on a down note, as a strong United States jobs report made clear that the Federal Reserve and other central banks can continue their monetary tightening policy at the expense of risk assets. This week brings the CPI reports in the United States, as inflation remains the biggest concern at the Fed and other central banks. The European Central Bank meets this week amidst the expectations of policy normalization. And with oil prices closing in higher last week and a bevy of corporate rumblings over storm clouds ahead, reminders abound that a soft economic landing may be difficult to realize, no matter how strong the consumer is. Here's what to watch in the markets for the week ahead. So the first and most important one is the United States CPI report, which is something we've been talking about. Friday's United States CPI report for May comes a few days before the next Federal Reserve meeting, which is another thing we're talking about, and will act as a final input before the Fed decides how much to hike rates. If they could do 0.25%, I think we see some bullish characteristics. If they start doing 0.5% or even a 1%, I'll anticipate some bearish characteristics. So we'll have to kind of watch to see kind of what they're going to forecast. Because if they forecast high, that's going to scare investors. If they forecast low, then they're going to encourage investors, and that'll be a positive thing. So to be determined for next weekend. So we may have to do another meeting. Inflation is expected to come in at 8.3% year over year, which is crazy. While core inflation, ex energy and fuel prices, or excluding energy and fuel prices, is expected to come in at 5.9% year over year. The latter number would mark a third month of consecutive declines, make the case that core inflation may have peaked, which would echo the slower wage growth in last week's jobs report. At the same time, the overall inflation number of 8.3% would be close to peak, and given the pain at gas pumps and grocery stores, consumers may take little solace in knowing that the core number is leveling out. So then the second one was the European Central Bank meeting. Whatever affects them, it's definitely going to affect us, just not as much, but it's still, kind of ranks second place on this list. So while central banks around the world have begun their rate hike cycle, the European Central Bank is seen as a step or two away from it. Eurozone inflation hitting record highs, though, has added more urgency to the discussion. And analysts expect this meeting to make clear then that rate hikes will be coming in the third quarter. The European Central Bank president said as much in a blog post 2 weeks ago. So both the European Central Bank statement and the press conference to follow will provide a chance for the laggard to alliterate that the road back to positive interest rates and to affirm the bank's credibility. The euro and the dollar rose 1.67% since the end of April and 3.55% from mid-May's lows, suggesting that the bank has re-won at least a little bit of that credibility with the markets. And I'm always telling people, especially those that are into long-term stocks, I'm telling you guys, it's a bank season. For the next 2 years, most investors, as we're looking at like straddling and options activity, what was the number one bank that we saw mostly? It was Bank of America. Bank of America is really low right now. I believe it also pays a dividend. So not only are you holding on to something that's going to appreciate, but they're going to pay you a dividend every 3 months. So interest rate hikes are going to continue for at least another year and a half. And if interest rates go up, banks are going to make more money, the banks become more valuable, and so does the stock values. So most investors are investing into Bank of America because it's probably one of the most dependable or reliable, but it's the most probably cost effective out of all of them. I was seeing a lot of activity for $50 calls and maybe even $60 calls by the end of the year. And so that could be a 50%, 60, 70, 80% gain if you're holding on to it as a share. So we're in bank season for the next two years, but it just depends on how high interest rates can get. Our economy is going to do some really weird things. Most likely it'll happen more in our next bearish season, because the stock market has a cycle. It has a yearly cycle and it has a 10-year cycle. Now, the yearly cycle is obviously where usually 6 months, usually during the fall and the winter time, things are usually down low. But sometimes it can be maybe the winter and the spring. But usually for the next 6 months after that, it reverses itself. It'll then trend upwards, because usually during the summertime we have a lot of technology companies or biopharmaceutical companies that are coming out with the latest and greatest stuff, whether it's cancer treatment drugs or the next iPhone from Apple or with Tesla. Now, it wasn't that long ago, I think this last week, Elon Musk had announced that they've had to push back their little Tesla event. I think, what was it, September 30th or whatever. They want to introduce their artificial intelligence robot. And so they're adding a new product to their list, which will make them more valuable. And Elon Musk is a very intelligent person. He knows what he's doing. He knows what works, what doesn't, and that is it's a product. It's something people are going to order. It's something that people are going to buy, because it has a value to the consumer, whether it's to be as a caretaker to a certain degree, or for a business. Maybe it could be a fry cook or a janitor, something. I mean, this is huge. This is like a science fiction movie, but it's happening. It's real, and they're going to reveal it. Now, the other thing too is Apple. Now, it's funny. I'm going to tell you guys a little story. For the longest time, Elon Musk with Tesla was always on the verge of going bankrupt. They weren't a profitable company up until a few years ago. However, he knew that people still love Tesla. They invest in Tesla. That people love Apple. That people invest in Apple. So one day, Elon Musk met with Tim Cook and said, "Hey, Tim, people love Apple, people love Tesla. Let's do something. Let's work together and partner up with something, and that way it could benefit us, and it can benefit the consumer." And Tim Cook was like, "Hell no, we're not getting in the car business. We build iPhones and computers and things like that, And so he was like, "Fine." And so he went off his own way, and he did what he did, and he eventually became successful all by himself. And now with Apple scratching their head, they've gone through a lot of lawsuits about the whole not being able to replace the battery, trying to force people to buy new iPhones every couple of years because maybe the battery went dead, or maybe their iPhone was slowing down. And so Apple tried to do whatever they could to maintain growth and profitability. Well, after a certain point, they now see that they've reached the end of the road. And so Tim Cook had revealed some bits of information about I believe in the beginning of 2021. He announced, we're finally getting in the car business. They've been working on developing an electric vehicle, and I'm talking about Apple, like an Apple iCar or some kind of SUV crossover. Who knows what it's going to be? But so when he mentioned that, he wanted to have it come out as a 2024 model. Okay, so that's good to take note. So we got to look at how Elon Musk has, we got to look at what Tesla's been doing, but also Ford Motor Company has been doing. When they reveal something, how long does it take until it is out? So it seems like it takes about 2 years. They'll reveal something, and then when they reveal it live on YouTube or on their website, what does Elon Musk usually say at the end? Now you can go to Tesla.com and reserve it. It used to be $500. Now it's $100 because it helps. It helps encourages people, because everybody has $100, and so the number of reservations have grown significantly more than what it would be if it was a $500 reservation fee. So now with these earnings report, we could say now we have all these hundreds of thousands of reservations, or even though they haven't even built one yet, it still is a way to manipulate the investors and the stock. And so when Ford did that with the Mach-E, it took 2 years for it to be delivered. Same thing with the Ford F-150 Lightning. They revealed it. It took 2 years. Now people are going to be getting it, I think, later on this month. So if Apple follows the same trend, they will hopefully this summer, they're going to reveal the new iPhone, the new iPad, this and that, and hopefully, if you guys ever watch, do you remember watching the iPhone X reveal? They were talking about the iPhone 8. It was iPhone 8. We got the color this. We got the iPhone 8. Blah blah blah. And at the end, it looks like they were almost done. But then all of a sudden they said, "But wait, we're not done yet. We have a surprise for you. It's the all-new iPhone X." And we're like, whoa, where did this come from? I'm like, wait a minute, what happened to the iPhone 9? However, I'm hoping that this will be the same scenario. I'm hoping that they'll go over the iPhone this, the iPhone pad, and I'm hoping that they'll do the exact same thing. I'm hoping they'll say, but wait, we're not done yet. We have a surprise for you. The new iCar. And they come out, if they do that, oh my goodness, this stock is going to surge like crazy, because the iPhone is probably over 70% of Apple's revenue. If they come out with this car, this car is going to be 70% of their revenue. A new product that they've never had before, and they're going to take reservations, and they'll be able to use these numbers to help manipulate their stock and to cause it to surge like crazy. So that's for that. So third one is the oil's next direction. So the OPEC's announced that they had a 50% production increase did little to slow the rise of the crude oil, with both the WTI futures and the Brent finishing the week just shy of $120 a barrel. Despite the rumblings of slowdowns, economic expansions, and the consumer demand suggest that the demand for oil will remain high, and there are doubts that the OPEC's production increase will be enough to even be fully realized. Probably because they're shipping it all to Europe. For the week ahead, eyes are on whether the United States President Joe Biden will decide to meet with Saudi Crown Prince Mohammed bin Salman amid human rights concerns. As we enter the summer travel season, weekly crude oil inventories and gasoline inventories will be of interest. and they will likely correspond with the Michigan Consumer Sentiment Survey, where readings are approaching the 2008 and 9 lows. Admittedly, lows also seen in the debt ceiling crisis of the 2011. A reminder that the survey can reflect political sentiment as much as anything else. Number 4 is the first quarter earnings season hits the home stretch, which is something that we've been talking about. While we are through most of the first quarter earnings season, the big reports numbers this week that will give read-throughs to various investing themes. So Docusign was the big one that we're talking about, is poised to report Thursday after the bell. The software as a service former high flyer was one of the first to start warning of slowing activity, and investors may now hope it will join the recent resurgence seen in names like Zoom Video Communications. And some of these other guys are scheduled to release their earnings, like your Okidata, Smartsheet, the Coupa software, which is another one, are also among software companies reporting this week. Other ones like J.M. Smucker Company, Campbell's Soup, both report this week may all offer some insight and impact of inflation in consumer staples. Likewise, the Casey General Stores, Five Below, and the Signet Jewelers all report from the retail sector, giving another round of inputs on consumer spending and appetite. NIO reports earnings on Thursday, with the Chinese electric vehicle automaker near its 52-week low as it has struggled with coronavirus-related lockdowns in China. Now, China just recently opened back up its 2-month lockdown. This lockdown thing, I mean, this is all obviously to help bring the stock values down. And bad news is good news. It just depends on how you apply it. And so you buy low. I mean, that's a great opportunity. Economies just don't normally shut down, and when they do, you'll see prices or values that most likely you'll never see them that low again. And so just like NIO has been hovering around $15 a share the last several weeks, has been provided huge buying opportunities. I mean, this thing was $60, not that long ago. And so and if it can get there, it can easily get there again, especially as NIO is expanding into Germany and throughout the European market and building more factories and stuff. They're watching Elon Musk too, and the more, if you build it, they will come. And they'll be able to build more, they'll be able to deliver more, and China, their government, they're going to see it happen. So NIO is always one of the greatest. And I'm going to show you guys something else too. Watch this. So I'm going to go to Google. I'm going to type in NIO CNN forecast. This is something you do not see very often at all. And in fact, I challenge you to try to find another one. So NIO, which is currently at $18, out of 29 analysts offering a 12-month price forecast for NIO. Again, so NIO is currently at $18. The lowest forecast for this is at $23, which would be a 27% gain. The medium forecast in 12 months would be about 31%, which would be a 74% gain. The highest forecast is at $82 in 12 months, which would be a 358% gain. The thing that's rare that we don't see with this very often is that every single one is higher than the current share price. You don't see that. The lowest usually is lower than the share price. This is telling us it is a no-brainer to invest into NIO because it's a no-brainer. It's a low risk. Either way, it's going to be higher in 12 months. Unless there's a World War III or something, then that changes everything. But most likely that's not going to happen. And so this is a win-win. And once you find this page, you can bookmark it. And when you're on the top, you can change the ticker name. It makes it so easy. You can change NEO to whatever you want, to whatever that you want. You know, Apple. We can see Apple here once it refreshes. And again, like I said, the Apple lows, it says $145. The high is $219. But it's anticipated that in 12 months, Apple is going to be around around $190. And that's out of 39 analysts. The more analysts, the better. If you're seeing 1, 2, or 3, it's just not enough. But I mean, it's something, you know. But 39, this is really good information. But I mean, it's $145 now. If it's $145 in 12 months, you're not losing anything. But like I said, you do not normally see where all forecasts are higher than the current share price. And that's where I would say NEO should have a lot of attention right now out of any Chinese stock. Let's take a look at Alibaba, just for the heck of it. I haven't seen what the forecast of Alibaba is, but let's take a look. And look, same thing. So now we found two. We got two, even though the lowest part for because Alibaba right now is at $93 a share, but it's saying in 12 months, you know, at the worst case scenario, it's going to be at $106, which would be a 14% gain. Best case scenario will be up to $232, which would be about 149% gain. So that is really good, just not as good as NEO, but still, these are great things to see and tools to utilize. Whether it be the CNN forecast or any of the options bits of information through bar chart. Now there's another website that I use through NASDAQ.com. Once you find the most active options for a particular stock, you can also change the ticker in the URL address. So I have Target in there for now for the heck of it, but I'm gonna replace it with NEO. So this way, because with bar chart, it shows us kind of the most active individual options or calls and puts and whatnot, but it doesn't show us the most active individual calls and puts for a particular stock option. So now we're utilizing the NASDAQ website, and it's free. It doesn't cost anything. And so we're seeing the most active calls and puts for NEO for last Friday. And so now NASDAQ just redesigned their website not that long ago. They used to have the expiration dates on them. Now we have to click on them to determine whether they're still active or if they're expired. So, but a lot of times you can tell, especially if the value is like, if it's nothing, most likely it has expired, worthless. And so if I click on the top one, so we have an $18, call. So, but it has expired. So this is June 3rd, because today is June 5th. So that's expired. Kind of work, and we can work our way down. Obviously, these are expired, worthless, because they're only a penny. There's a $19 call, so we can click on that one, see if that one's still active. June 10th, so that is still active. So far out of this list, the $19 call or $19 call that expires this coming Friday dominates the call list for now because it's the most active. We have 4,900, almost 5,000 in options volume, but it had 4,700 in open interest. So then we can go down to puts and kind of compare that as well, and kind of determine, what people are doing. And it's the same concept with the barchart.com, where this information usually updates usually about after the first hour when the stock market opens, but then it'll refresh every 15 minutes after that. You just got to click the little refresh button, and then all the data updates. So that way you can always stay informed on what is going on. And so that's that. Any other things? I think that is about it. So that hopefully this information helps. Does anybody ever have any other questions or comments? Need to go over anything, or everything makes sense regarding calls and puts and whatnot? Okay, good. Everything makes sense. If you ever have any questions, you feel free to message me on Messenger, and I'm always available 24/7. Thank you guys. we'll see you later. Have a great week, and let's make a lot of money, a lot of gains.